Hey everybody, it's your friend Jason Pound here answering the top asked questions by home sellers in today's Oklahoma real estate market. Question we're tackling today: what is the top red flag that I should look for as a seller when an offer is made to purchase my home? Well, the short answer is asset depletion loan. As soon as you hear that, you better perk your ears up and your realtor better be digging in for more details. However, as usual, let me over explain. One of the things that I worry about is that I sing the praises of Jarek and myself too much. And you might get the wrong impression that we view ourselves as perfect and that we do everything 100% correct. And that is not the case. I've been in real estate 10 years. Jarek has been in real estate 12 years. And every single year, every single month, every single day, we learn something new. And normally when we're learning something, it involves some pain. And this year, right now, it's August 2026. We have had 3 deals explode over the term asset depletion loan. And of those 3 deals, we have only been able to close 1 of them. And in this market, when you put a home up for sale and you market it and you go through multiple offers and you choose an offer, you want to close on that offer. You don't want to go back to the other offers and say, hey, the deal fell apart. Do you still want this? And we don't want to go back on the market. All the time you see realtors saying, back on the market at no fault of the sellers. Regardless, the market tends to penalize you for having to go back onto the market multiple times. In 2025, one of the pain points was investors would offer an as-is offer at your asking price, then they would do inspections, then they would renegotiate. And you thought you had a good offer, and the whole time they were not intending to honor that offer. That was 2025. In 2026, it's the asset depletion loan. So real quickly, what is it, who uses it, and why does that sucker exist? What is an asset depletion loan? An asset depletion loan is for somebody who does not have traditional W-2 income. So it's typically going to be a retired person with a large retirement account, 401k, IRA. It's going to be a self-employed person who does not have W-2 income, or it is going to be a wealthy person with multiple businesses, multiple streams of income, often many trusts and LLCs are involved. All 3 deals that I have run across this year with asset depletion loans were wealthy business owners with generational wealth wanting to use debt to fund the purchase of a piece of real estate and not use their own funds out of their checking, savings, or investments, which makes perfect sense. Number 2, who uses these loans? The people who use these loans often do not have traditional tax returns. And when you look at their tax returns, it looks as if they make no money or they make negative money, but they tend to have millions of dollars in the bank. For example, when I was a banker, I had a client with $10 million in the bank, and we could not make them a $20,000 car loan. Now, that was the decision of the bank. More than likely, there is a bank out there somewhere that's willing to make that type of loan. But basically what they do is they take your assets and they don't calculate if you can pay off the loan easily. They calculate, can you divide those assets by the length of the loan? So if you have $2 million sitting in the bank, they're going to say $2 million divided by 30 years of mortgage payments. And can that asset support those mortgage payments, whether or not the value of your assets go up and down with the market? Because everybody knows the stock market loses money some years and other years it makes money. So qualifying for these loans is very, very difficult. I have a lender who does these types of loans, and he only has a 25% approval rate. For every 4 millionaires that come to him to do one of these loans, he's only able to get 1 of them qualified. So why do these loans exist? The reason these loans exist, your traditional home mortgage products put out by the FHA, the VA, the USDA, even your conventional products, which are backed by, I think, Fannie Mae, Freddie Mac, Ginnie Mac, all of these institutional investors that are controlled by the government, they are designed to help your normal, everyday W-2 individual to buy a house. People such as myself, who is a self-employed business owner, I do not easily fit into that box. So this is why the asset depletion loan exists, is because there is a category of individual out there who is successful at making money, successful at paying their bills, but they're also successful at whipping the IRS with the tax code. And these individuals still deserve and should have the right to purchase real estate using loan products. The problem is the asset depletion loan is much more heavily underwritten. You have to have higher credit scores. You have to have higher levels of assets. You have to have higher amounts of down payments. And you also have to have higher levels of reserve savings, because not all of your assets count the same. A checking account counts differently from a savings account, which counts differently from a CD, which counts differently from the stock market, which counts differently from your coin collection and your baseball card collection. Not all assets are counted the same. So we just came out of home selling hell. One of our clients was selling their house to buy another house, and this was the type of loan involved, and it ended up delaying closing by 3 weeks. And the people who qualify for these types of loans are often very aggressive negotiators, very selfish when it comes to inspections and repairs and price negotiations. And these people often want it their way or the highway, and you have hardly any negotiating leverage. So after we were knee deep, elbow deep, wrist deep, neck deep into this transaction, we found out the day before closing that they couldn't close. And they changed the loan type from this type to another type. And then that one wouldn't qualify. And we changed it from that type to another type. And then that wouldn't qualify. It took us 3 weeks to figure out that they can't even qualify for a freaking loan. And they ended up paying cash. And had they done that 3 weeks before, my sellers would have had zero pain. So yes, Jarek and I, this was our third transaction to get exploded by an asset depletion loan. And guess what? Next offer that comes along involving one of these loans, we're going to ask a lot more questions. And we're probably going to ask for non-refundable earnest money. And we're probably going to raise the amount of earnest money that we're asked for. We are no longer going to take risks with asset depletion loans. We've learned our lesson. Hopefully you have learned your lesson as well. My name is Jason Pound with Jericho Pound Realty Group. We service the entire Oklahoma City metro area with hyper-local expertise in South Oklahoma City, Moore, and Norman. If we can ever be of assistance, don't hesitate to reach out. We're here to serve. In the meantime, peace out, have a great life, and I'm going to get back to work.